Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, December 14th, and we are coming at you after the recent federal funds rate hike announcement. And Jerome Powell just finished up his speech a few minutes ago. So we pretty much have the full picture of the market as it stands right now. And let's see where we're headed next. So the rate hike was 50 basis points as expected. No big change there. I think there was a 96% chance that that was going to be the result. We actually pumped into the rate hike announcement. I know we're on the 4-hour chart right now, but just know, actually, I'll switch to the 1 hour to make it a little bit more easier to understand. We pumped into the rate hike announcement. The rate hike announcement came right at this candle. We popped up and immediately sold off. Nice little Darth Vader wick there with the lightsaber on each end and the handle right there. Big body down, and we are hovering right around the 1 hour 50 moving average. Also lower end of the current trading range, which could end up just being deviation from the previous trading range that we were in since the beginning of November all the way to mid-December. If we do close back in this range, and the range is down here at 1220 up to right around 1300, we're hovering around that now. If we close back into that range, we will likely end up being stuck in this range for the time being, considering we have what looks to be a double top right here. We also have bearish divergence as the movement is higher but lower for RSI. We also, I think it's also forming on the 4-hour chart, not as obvious, so it's not actual bearish divergence, but beginning to form what could possibly become divergence, especially if we cannot reach or break 1350. So looking at sentiment, we have more or less bearish neutral. We definitely have a few outliers on the board, but very bearish and neutral in terms of daily, hourly for the majors. Bitcoin daily sentiment, as we described yesterday, was bearish going into this. So we did talk about that potential pump pre-FOMC, continuing with that momentum, but obviously prices back lower than where it was yesterday. So that's the S&P, I'm sorry. So we are back to post pump levels and look to be heading lower as Bitcoin is seems to have deviated from the 18K level. But sentiment is bearish, as we described. Very similar for ETH. It's been consistently bearish, nothing positive. We do have some higher tweet volume, but lower trading volumes, even with the increased volatility today. So not entirely positive in terms of future outlook. Looking at DXY, which we often do, still holding on to that support that we drew yesterday at that 103 level. Very interestingly enough, you would expect this to start to you would expect this to start to break down. And we described this lower level. It's obviously still beneath the RSI trend that we drew, but it's still continually forming bullish divergence with each drop lower, which could mean a small spike up, or could mean that it eventually breaks this trend higher. In my opinion, just because this has been so bearish, especially with the Fed outlook and the desire to keep rates higher for longer, which was definitely a key takeaway, I wouldn't be surprised to see some sort of reversal out of DXY soon, considering it's right in the median of this previous trading range. It is pretty much oversold, not fully oversold, but definitely as oversold as you can get without becoming oversold. And it just makes sense given the Fed's narrative and how the market has reacted previously. Typically, when risk heads lower, DXY is heading higher. And obviously, we're not seeing any material move higher, but it is somehow managing to stay. And we've got a nice little potential doji forming here. Whereas on equities, if we look at the 4-hour, it is selling off pretty hard. So now that we're looking at equities, talking about how it was starting to consolidate here and starting to look a little bit toppy. When we spoke yesterday, we had, we were coming off of this big spike from the morning. And I mentioned that, we were pretty much stuck down in this range. And although we did have some deviation above that range again this morning, we got piped right back down to levels that we saw yesterday. So not very positive, but silver lining is we are still above the support level that I drew yesterday at 39.86, and it is above the 4-hour 50-day moving average, which is currently acting as support. So typically what you'll see, if you just quickly look at RSI previously, when it's oversold or when it's overbought, it gets back to oversold. And especially when it's overbought twice without fully oversold, there you go, all the way down. And so RSI has been pretty clean lately with all of this technically driven trading. So my estimate, and I think would be a mostly wise one given the Fed's outlook, is that considering we became oversold, we had range deviation not once but twice, we're now at the lower end of the range and we're still not oversold yet. At the very least, I would not be shocked to see price continue to trickle down to at least the 200-day moving average, maybe 39.40, maybe 39.50, which was, just above where we were previously, for a potential bounce and or break down towards 3,900. I would say the breakdown towards 3,900 is a little bit more likely, but obviously we have to take it step by step. And I think 39.40 is a decent target. But prior to that, we have to lose 39.86, 39.87. It is currently hovering above that. This candle does not close for another 2 hours and 15 minutes, so plenty of time. But as you can see here, very ugly candle, or what originally seemed to try and become, a bullish hammer. It seems to be a potential recovery immediately rejected back down to support. So not entirely positive here, but we could see some sort of attempt at least back to the daily high before getting cut down again. So we know our levels here. I think 40.17 will be very significant. 39.86 is significant. And in my opinion, 39.40 will be significant for a potential move to 3,900 or lower. Looking at Bitcoin, we said 4-hour, massive deviation above where we've defined the current range being 18K to 17.4. We're now, kind of floating that mid-range level, and we are beneath the daily close from yesterday. Looking at the hourly, definitely bearish divergence here, up, down. Typically in this, you will definitely see RSI reset. Doesn't mean it's automatic. You definitely will see volatility. We could again tag that yesterday's close, which was about 17,780. 17,780. If we can get above 17,780 and close that, then maybe you have another chance to get back to 18K. But considering we're trading beneath it, it does look weak. We haven't grown oversold yet after all this volatility. It would not shock me to see Bitcoin trickle back down to 17.4 for a potential rise, or break down to this next POC at around 17.1K. Very similar outlook for Ethereum. Deviation above the previous range, hovering just above the previous range, not looking very strong. Definitely some bearish divergence here. Body, rising, top, lowering. So would definitely expect to see this eventually grow oversold as well, although it is becoming oversold. So for ETH, it has to hold above 1306 to end up heading higher. And of course, the previous daily close will act as resistance as it did previously. Previous daily close is 1320. So if that happened, then you'd expect potentially a mini range, and you'd either break up or break lower towards 1280. We could, of course, not even retest this, considering we already tried, and it is now back towards the current level. So we could just end up trickling down to 1280. And of course, if 1280 fails, then I would expect some volatility at least around here, maybe 1270. And then of course, the lower end is 1250 for that. So considering we got all the volatility from the Fed just now, and obviously the market is now kind of repositioning based on an increased federal funds rate outlook. I believe it's, we've still got 0.75 to 100 basis points to go in terms of hikes based on the federal funds rate prediction a year from now. And actually, the easiest way to demonstrate this is previously federal funds rate was 3.75 to 4%. Now it's 4.25 to 4.5%, obviously a 0.5% increase. And then now we're predicting for the end of 2023 for it to be 5.25%. But I've actually seen estimates potentially all the way up to 5.5%. So we pretty much got 0.75 to another percent to go. And the Fed's already talking about keeping rates higher for longer to keep inflation down. So, not a very positive outlook. It seems a bit more hawkish than dovish, in my opinion. So definitely a bit of a bear on risk markets, including Ethereum and Bitcoin. DXY, if that was the case, if Bitcoin, Ethereum, and especially equities were to drop further, I would definitely expect DXY to increase at least back probably to 105.3, maybe higher. If DXY continues to further break down, it's not a 100% bet that equities and Bitcoin and the rest of risk will rise higher, but that would be more likely if DXY was to continue to falter. So the bear case is ruined if DXY firmly breaks beneath 103.5 and closes beneath it. And the bull case is on if it attacks the previous daily close. And of course, vice versa for equities and risk. So we'll see you guys tomorrow. I have a feeling that we'll see some very interesting volatility into the daily close. We got our major volatility just now. We know that more volatility comes at the end of the day, and we know that more volatility will come when the market opens tomorrow. So I'm expecting a pretty fun day tomorrow that will probably be preceded by some interesting volatility this evening. And then I would assume that momentum will continue to drive tomorrow and into the weekend. And right now, momentum is pointing lower. But of course, that could reverse depending on DXY or some other macro catalyst that may come out in the meantime. So good luck. Happy trading. If you're not in the Trade the Chain community, that's obviously where all of the good, juicy alpha and predictions for the day go in the morning. And of course, we follow up with analysis and interesting news afternoon and night. So please make sure to get your risk-free trial at tradethechain.com. You get a 14-day free trial and join us and use the software that we use to execute great trades and join in on our discussion and conversation. I'll see everybody tomorrow, same time, same channel. Good luck and happy trading.